Now, who files? Well, we start with filing status. And this is going to be very important. Single, whether you're under or over 65. Next, head of household. Basically, this is a person who is unmarried with a dependent child or deemed to be unmarried by the code. Married, filing jointly, under or over 65, both spouses or only one spouse. Married, filing separately at any age. A qualifying widow or widower, under or over 65, with a dependent child. A qualifying widow or widower is a taxpayer who is eligible to file a joint return for the year in which their spouse dies. The spouse died either during the 2 years immediately, during either of the 2 years immediately preceding the tax return. The taxpayer is not remarried, and the taxpayer is at least one dependent who resides with him or her. I didn't have that definition in there last time, and some people asked me, and I said, well, I'll look it up and tell you. All right, this chart is important because it determines what your gross income has to be in order to have to file. Now, it's important for you to realize every single U.S. tax return must be filed in U.S. dollars. If you earn money in pounds, if you earn money in euro, if you earn money in any other currency around the world, it has to be converted to U.S. dollars in accordance with the Internal Revenue Service regulations, which prescribe a specific exchange rate for each currency around the world, and you can find that exchange rate on the IRS website. So, whenever I use these numbers, think of it in terms of the equivalent of. So, if you're single, under 65, your gross income must be $10,150. Essentially, you can just look down the list and you can pick yourself out. What stands out, of course, is married filing separately, because that's a very low filing threshold, $3,950. Now, what's gross income? Well, you exclude Social Security benefits in calculating gross income unless, this is a typical tax law. You do something unless and then you give an either or. So it makes it all the more difficult to understand. But you exclude Social Security benefits unless you're married, filing a separate return, and you live with your spouse at any time during 2014, 11, 12, whatever year it was. Or 1/2 of your Social Security benefits plus your other gross income and tax-exempt interest exceeds $25,000. So if you have more than $25,000 in gross income, having excluded half of your Social Security benefits, then you have to report all of your Social Security benefits. Now, right, I'll get to Social Security. I'll get to the Social Security reporting deadline, reporting requirements a little later and how they're taxed. But just in calculating your gross income, in this example, if you're married filing separately and you live with your spouse, this will be a case where you are a U.S. person married to a non-U.S. spouse. You may very well, our default position is for U.S. citizens with non-U.S. spouses not to file a joint return. The reason is that you then voluntarily subject your spouse's income and assets to U.S. taxation on their worldwide income. And often that will not be a good decision. So in this case, you would fit into the first category, in which case you could not exclude your Social Security benefits and you'd have to file a return.